Trading Unlocked, and we are here on Friday, April 3rd, 2020 for a daily Forex market analysis and live trading breakdown for you. We're going to see how our trades have shaped up over the course of the week. We are almost done. We have a few hours left, but that's all there is left for this week, and what a week it has been. Not quite as crazy as it's been as of late, but it is nuts nonetheless. All right, our disclaimer is up here to remind you that this webinar is for educational and illustrative purposes only. So if you have any questions, you can join the chat on our Twitch channel or on YouTube, and we'll try and answer your questions. And if we don't, we'll get them definitely answered in the next video. But yes, we're going to go and check out how our trades have been doing. We did have a couple signals this week. They were high probable Japanese candlestick patterns, and what do you know? There's a book called High Probable Japanese Candlestick Patterns, also available on Amazon.com in paperback and Kindle version, or you can check it out on our website also. There's a link for it as well. So now let's get to what you really want. We have our www.forex-trading-unlocked.com website pulled up here. We have the workstation page already pulled up. We all know that unemployment came out for the U.S., and as it was expected, it went higher. However, it is not at the 10 or 15% like all the economists were saying we would be at already. I think we have a little bit of time before that happens, and hopefully with the stimulus package, we won't hit those high numbers. Hopefully we'll stay under 10%. So right now we are running at now for just over 4%. For unemployment, obviously these are things that were expected. This is a new world that we are in. Normally, if we didn't have this coronavirus, people would be like, oh my gosh, what's going on with the economy and blah, blah, blah. But however, this is something that we all are aware of why it's going on. It's a forced recession. So we have the U.S. dollar, Japanese yen pulled up already. And why do we have it? Well, we have this blue line here at 108.75. Well, if you remember right, if you've been following our videos, we have a few Nadex binary options positions on 2 Japanese yen trades we have on. All these are long, meaning that we want them to be the market to settle greater than the strike price. So we have a U.S. dollar Japanese yen at 109.75 strike and 108.75. 109.75 getting hit today most likely isn't going to happen. However, the market is trading at 108.41 as we are speaking. So all it needs is another 35, well actually 40 pips would be the ideal thing. Get above there, and then we can either sell out of the option, or we can hopefully get it to close above there, and then that will be a profitable option, in which case then we will make money on that. So right now, as you can see, we are down, but that one is close to being in the money. We'll see what's going on. We do have one winner today for the week, the US dollar Swiss trade. We'll get to that in a little bit. Canada, we got chopped up. We lost on this option just like we lost on our outright Forex play as well. So, but I do have some other ones that are winning. So they're offset, and right now, as you can see, our P&L, we are positive on the week, and I doubt that the US dollar Swiss is going to crash. So the only thing that can happen here is that we either make what we're at right now plus a couple bucks actually a little bit more than this, because there's no way that the Swiss is going to crash all the way down to below 96.25 in the next couple hours. But the yen rallying 40 pips and settling above 108.75 has a possibility, in which case then we would be making more money. So right now we can see that no matter what, our Nadex positions will settle positive on the week. The question is, can we get them any higher? And that's for the 4 options that we had purchased. So we are bullish to US dollar, Japanese yen. This is going into the trade for the new week. Another thing to take into account is the fact that we did have a short-term buy signal yesterday. We had bought into this break this week, but luckily we had a buy signal yesterday, and we'll see. I think that you're going to see that this is now established a higher move low, and we are going to make a run for these highs up here. So we're targeting definitely a run for a 111 area to upwards of 113 over the next week or so. That's pretty much our target area. So now let's take a look at the Australian dollar, US dollar, and see how this is faring. This market continues to go lower. You can see it's been grinding lower all week long, but not really very impressive considering the volatility that we've had as of late. But there is one thing that kind of supports this bearish notion in this with the Australian US dollar, and that is the New Zealand dollar, US dollar. Both markets have been trading rather in tandem for the most part, and definitely and have been directionally on side by side as this market has been breaking over the past month and a half, especially with the volatility we've had in the month of March. Boy, what a month that was. That was the craziest month I think I've ever seen with the currencies. So anyhow, and I've been around for 30 years in this business. So anyhow, we are bearish the Australian dollar, US dollar, and it's supported by the New Zealand dollar, US dollar, which we're going to show you right now. And if you've been following our videos, you remember that we had a 3 inside up sell pattern that was triggered a few sessions back. And as you can see, we've been grinding lower. Now this market, are we overly bearish? Absolutely. The market's been in a bear trend for quite some time. It's making lower move lows and lower move highs. Hence what? That means it's a bearish market. Now, this was an upside correction right now as far as we're looking at it, but then who knows? This market may become a raging bull for all we know. But right now, it looks like support is going to be tested into the new week. We have a target down right around this 56.80 down to 56 even area. This could be a place where we start to see support. Like the dollar may be stretched right now, and we may not have much more, even if it's a bull in the short run, like buying dips in the dollar may be the thing to do, but it might be a range trade that we're really starting to establish. So I think that buying dips and selling into rallies now is going to be more towards the range trader than the swing trader is for an advantage over the next couple of weeks. And we'll see the reason I'm saying this is once we get to some of the other major currencies, you'll see what's going on. But since we do have signals like we do in the New Zealand dollar, US dollar, we got to go with it. So right now we're targeting that lower part. Once we hit that area, there's no reason to look for it to go any further. We're just looking for it to get down to there. And we'll see how that manifests. Hopefully it'll be done probably sometime over the next week or so, especially we're going into a weekend trade. So everything is weak over there in Asia. Let's show you what something else is going on here. And this is showing dollar strength once again, not just going into the weekend, but period. Turkish lira, this market we've been talking about for ages, how it is a bull, but look at how it just, no matter what, it grinds higher, it gets a little correction. Even yesterday, it looked like it wanted to sell off. We had a sell signal yesterday, and it turned right around and just reversed gears today. So, and I think this is probably because of the coronavirus trade. You got to remember that that is fundamentally in place, helping to drive the U.S. dollar bulls. In the long run, a strong dollar, especially with as strong as it is right now, it could hurt us, especially for our exports. But right now, I think this is all coronavirus related. Remember, markets tend to go out like they go in. So there should be an adjustment that comes once we get to some sort of flattening of the curve around the globe. But since right now we don't seem to have that, and we're going into the weekend, well, then we got to be bullish the dollar, I think, especially with your lesser crosses. To support this notion of this dollar strength that we're seeing, obviously, in all these markets so far today, is the U.S. dollar Mexican peso. Also, this market had been just, look at this trend, escalating so high, so quickly, and then boom, it had a nice correction. It looked like it wanted to start to go into a sideways consolidation as of yesterday, but now with today's piercing higher move highs and the fact that we seem to have the growing numbers still globally, the dollar bull seems to be in place, and I wouldn't doubt that we see a challenge of these highs. How high can we go? Well, who knows? But I think we still have the ability to pierce the 26, maybe even 27 pesos to the dollar in the short-term future. Now, here's a one of the markets, which is starting to show us that we might be coming into a consolidation period. Look at this market. This one chopped us up this week. It chopped a lot of people up. You could not have been a bear or a bull this week and been trading it definitely intraday and not gotten beat up. I mean, this thing was just chopping all around its range, and look at basically every day it settled right around the same pricing. You have a low of around $1.40.60 to $1.41.50 there, and we're right in the middle of it. So, and look at even today's range. Everything else is pushing extremes. We have some sell signals like we showed you, and we're going to get to a buy signal in just a moment. So we're starting to see major markets like the Canada consolidate. And even with the peso, it may not make those newer move highs. It may just start to set a range trade at those levels, which is very, very possible. And then now we're going to look at the GBP USD. So the British pound US dollar in the UK is definitely affected by this coronavirus just as much as everyone else is. And they had a really tight range all week long. It was pretty amazing that while the other currencies were pushing extremes, they're actually bouncing around. I mean, this market's had so much volatility March, and here we started off just boom. This week was ending the March with just a very tight range. Today, obviously, we made lower move lows on the week, and we are just off the lows right now currently. So, but you know what? This market looks like it's consolidating. It's now it's starting to hover around in this 50% area from this high down to this low. Maybe that's what we're going to start to see. This is one of the strongest currencies in the world. So to see this one go through this type of volatility and all of a sudden just dry up into this, it's a good forecast that either this thing is like getting cocked and ready to blow somewhere, or it's going to just establish a range trade. And if that becomes the case, like this has happened before in markets, like especially after September 11th, you had a lot of volatility, and all of a sudden, zzz, it was like a flat line for many markets. People who were trading back then definitely remembered how after September 11th for upwards of 3 years, it was very tough to trade any markets. There was just very tight, not much volatility, not much follow through. The reward to risk ratios just was out the window. So I think we could be coming into a range trader's delight and a swing trader's nightmare over the next couple months. So we'll see how things go. Anything can happen. Wait for your signals, and then you'll see what to do, right? Stick to a plan. Euro US dollar, obviously, hanging on newer move lows once again today. This market's been under pressure all week, and we have been short this one all week as well. As you can see, we've been short. We rode it through the highs, and now it's come down. We're up now in this trade. We have a protective stop in, but the reason we're staying short this one is because the Euro US dollar has basically been in an inverse relationship to the US dollar Swiss, or actually direct relationship if you go the other way, meaning that the dollar's been a bull and both the Swiss and the Euro have been a bear. It's just a matter of to what volatility and what degree. As you can see, the Swiss on this MT4 chart is going higher. So right now we have these two trades. We're up in those. We've raised the stops. They're locked in. So we'll see how that goes into next week. We are staying with the trend. Now, one of the reasons we're staying with the Euro US dollar is because of the US dollar Swiss franc that gave us a buy signal. Now, we've finally, as of today, tipped into the upper part of our upside target zone. So what does that mean? Well, you can see that we already have a protective stop in, and we're going to start to raise it each day as we go forward if this rally continues. How far can this go? Now, this comes back to the whole point of maybe we're getting ready for sideways, big sideways. Dollar strength is obviously prevalent today. We can see this in all the markets that we've looked at today. That doesn't mean that it's going to prevail. We have been making higher move highs and a higher move low here when it comes to the overall picture with the Swiss. But we could also be, like now, heading into, we hit our target zone, we could dry up and start to consolidate. And all of a sudden, we're going to have the market trading between this area here and this area here, which would be down from 95 cents up to 99 cents. Reason being is this upper barrier here, the US dollar Swiss has an incredibly hard time with parity. If parity becomes the wall for the US dollar, that doesn't mean that the other European currencies aren't going to continue to be weak versus the dollar. Maybe they will be, and the Swiss will halt. Remember, the Swiss and the yen are both flight to qualities for their regions of the world, just like the dollar is an overall flight to quality. There's always the dollar. The US dollar and the US 30-year bonds are always where people go run to when the stuff hits the fan. So what we're seeing here is dollar strength as the week ends, but we're coming into a point where our buy signal here hit its point. So right now, is it going to continue higher? Well, that's who knows, But if it isn't, if this becomes where it stops, and then we set a lower move high. Well, after setting a higher move high and a lower move and a higher move low, and then we set a lower move high, well, that sets us up for what? Neutral. And then you can see, now see this range, this is why I put these points in there. Look at where we've traded. We've basically been in this range since, we bobbled in and around it since back in November. We were just above it, and now let's go back even further. See, here we go. We're all around this area here. It has trouble with anything above it. So selling above that range seems to be the way to go. I mean, could we go to 105, with the US dollar Swiss, absolutely. We could blaze through parity and just keep on going. I'm not saying that the US dollar isn't that strong. I hope it isn't, though, because once it starts to get to those levels with currencies like that, that means it's decimating other currencies like the Turkish lira, which we've seen it being with that such a strong trend right now. I mean, honestly, like the difference in what we've seen in appreciation in the market like that is huge. Let alone the peso. You've seen, over a 30% appreciation just within a month. So these things are very, very big. They will have economic effects down the road if the currencies stay where they're at. But right now we're in a short-term state of flux. And that's why I'm thinking we may start to head into a sideways environment, because that would be the best thing. Not that we need to correct the dollar and we don't want a strong dollar right now. I think that you need to with what's going on. But however, like I said, you don't want to overextend things, and markets always tend to go out like they go in. So eventually, if we drive so high like this, it should snap back, eventually and very quickly. So that'll help to offset things, and we won't be in such a position where all of a sudden the rest of the world is like, okay, America can buy everything from us, but nobody can afford to buy anything from America. So that's not good for the U.S. economy. We are part of a global network. We do sell to the world, so it's very important, these issues. So we've ended with this last market here with this 3 inside up buy signal here. Which is a high probable Japanese candlestick pattern. So remember, this one has already hit its target zone. We had the New Zealand dollar, US dollar, which, so just like we have the Australian dollar, which is going in tandem with the New Zealand dollar, this sell signal is in place. This one still has a little bit more room to go. So that's why I'm saying, I think the US dollar strength probably has a little bit more to go pushing into next week. And then we'll see if we start to see a flattening of the curve, and hopefully we do, especially in the U.S., because we're one of the biggest populations that's impacted right now. Then we'll see what happens. And if that does start to happen, then we'll probably see a little bit of a laying off of the U.S. dollar and see probably a big sell-off, actually, and get a correction where these other currencies will regain some of their value. As you can see, I forgot to turn something off today, but oh well. That's all right with that. So anyhow, once again, we have those two signals: the New Zealand dollar, U.S. dollar still in place. The U.S. dollar Swiss hit it. So high probable Japanese candlestick patterns will tell you how to trade these signals in both the Forex futures, options, and equity markets too. So there's all kinds of ways to use these patterns, and hopefully you take advantage of it. And you can check out our website, and you can preview part of the book if you want, or you can just go to Amazon.com and preview part of it there. And like I said, it's also available on Kindle and paperback, so you can either download it on your Kindle or you can buy the paperback. I suggest you buy the paperback, not just because I make more money, but because paperbacks just are better. It's all color, and you can it's much more functional to use. So anyhow, and it's also more green. So that's that. We want to thank you very much for your time. Please subscribe to our YouTube channel, Forex Trading Unlocked, and check us out every day at www.forex-trading-unlocked.com. You have yourself a good weekend, and we look forward to the next